All right, next presenter this morning is Scott Powell, Head of Investor Relations for Volition. Scott, take it away.
Good morning, everyone, and thanks for coming to the VolitionRx presentation. I'm Scott Powell. I'm the Head of Investor Relations for VolitionRx Limited, and I'm the Chief Investment Officer for Volition America Incorporated. Thank you again for joining the VolitionRx presentation this morning. Ticker is VNRX on the NYSE American. I will point you to our forward-looking statements and disclaimer slide. Just a reminder that I'll be making some forward-looking statements during today's presentation, which may or may not materialize down the road. So I do claim protection under the Safe Harbor Act. A little bit about Volition. We are a diagnostics company working predominantly in blood and working to develop a variety of blood tests to screen for both oncology and non-oncology based disease states in both humans and animals. Quite a significant intellectual property portfolio, as you can see here, 12 US patents granted, 15 European patents granted, and many dozen more patents pending. The ones that have been granted are fairly strong and fairly broad. In fact, we just successfully defended one patent in Europe that was challenged by an anonymous suitor. And so I don't really feel that we get a lot of value in our market cap or our balance sheet for these patents. I think over time, you'll start to see the value here of these patents get unlocked, as we license or as folks challenge and things like that. So strong IP portfolio. The platform, regardless of the blood tests that we're developing, regardless whether it's for animals or humans, it's the same underlying platform. So it's essentially the same alphabet that we're just creating different words from. So the same underlying technology that we create different blood tests. I won't talk too much about the science because I'm not sure how many of you are scientifically inclined, but it is a common underlying technology that that powers essentially our blood tests. As you can see here, there are 5 verticals or pillars within the company. I'm going to focus most of today's presentation because of the time constraints and also because of the milestones and developments, both clinically and commercially, focus mostly on Nu.Q and Nu.Q Nets. Nu.Q is our commercial division. It's our first division that's commercial. We are now selling our blood tests to screen for cancer in canines. We're selling it through Texas A&M University, through IDEX, through HESCA, and through a number of other licensing partners. And we expect that division to begin generating revenue this year and then generating significant revenue in the years to follow. Nu.Q Nets is a new division as well. This is a non-oncology based test. It screens for NETosis primarily in sepsis and COVID-19 patients. The Nu.Q Cancer vertical there in the center, that is our oncology program in humans. So we are developing blood tests to screen for a variety of different cancers in humans, primarily lung and colorectal. And Capture and Discover, those are our R&D platforms and our third-party services. So we do some antibody production and supply, some sample processing and so forth for third parties. But I'm going to focus most of today's presentation on VET and NETs. These are our key focus areas for the coming quarters and coming years, and this is where you'll see most of the key milestones and developments, and also most of the key value drivers for the company, for the company's stock, for our market cap, and so forth. I'm going to skip over to VET because this is our first commercial product and our first division that is now commercial. The name of the test is the Nu.Q VET cancer screening test, and we are solving a significant problem in animal health, particularly in canine health. So, as you can see from some of the statistics here and from some of the statistics here, there are about 84 million canines in the United States alone. Every year, 6 million of those canines get diagnosed with cancer. The problem that veterinarians and canine owners have is that almost all of those 6 million cancer diagnoses that occur each year in canines occur because the canine is first symptomatic or sick. And just like in human health, if you're sick and the underlying causal factor is cancer, it's invariably a stage 3 or a stage 4. It's the same in animal health. You have many of these aged canines, 12, 14, 16-year-old dogs that have been sick for a while, finally go in, get diagnosed with cancer, and unfortunately it's stage 3 or stage 4, and you really don't have any good options available to you. You can do nothing, try and make the animal comfortable and treat it a little bit so that it just passes naturally. You can euthanize the animal, you can put the dog down, or you can treat. Treatment, unfortunately, is not an option for many Americans because treatment can be very, very expensive. It can cost $20, $30, $50, $100,000 to treat a canine with stage 4 cancer. So that really isn't an option for many American families. So euthanasia is often the option chosen. Why do canines in America and globally, in fact, why do they mostly get diagnosed with cancer late stage? It's because we don't have tools that are inexpensive and are not harmful to screen canines on the asymptomatic side. So just like in human health, if an adult is screened for a particular cancer type on the asymptomatic side, and then they're flagged as positive, further diagnostic tests confirm that they do have cancer, it's probably a stage 1 or a stage 2, still treatable, generally have a lot more plentiful options available to that person. In animal health and for screening for canines, screening for cancer in canines, you really only have 2 modalities to confirm cancer in a canine. One is through a biopsy, so taking a tissue sample or samples of different organs of the canine where the cancer is suspected, and or imaging technologies, so X-ray, CAT scan, MRI, sonogram, et cetera, to identify the presence of a particular cancer in a canine. Now, both imaging technologies and biopsies are inherently expensive, invasive, potentially harmful to the canine. And in most cases, the canine must be given anesthesia. And just like in human health, a lot of adults have adverse reactions to the administration of anesthesia. Same with canines. Certain canines actually never wake up from being administered anesthesia, particularly older ones. So for these reasons, you don't take a 5-year-old, otherwise healthy German Shepherd into the vet for a regular wellness check and say, Doc, I'd like to spend a couple $1,000s extra for you to do a biopsy of its liver, spleen, pancreas, and stomach to look for cancer. And I'd like you to do a full body CAT scan to see if the animal, has any cancer types. You don't do that because it's too expensive, it's too invasive. So until our blood test entered the marketplace, there was no asymptomatic screening of cancer in canines anywhere. Now, for the first time, because our blood test is inexpensive, is being priced at around $100 to canine owners, so very affordable. It's an in vitro test, so it's not invasive. It's simply blood is extracted from the canine, and then our test is run. So we can't possibly harm the canine because we're not doing anything that's invasive. And we're showing good accuracy. I think we have some statistics. We have some statistics here. So you can see here in the bottom center, for hemangiosarcoma and lymphoma, we were detecting about 80% of canines with those 2 cancer types. Those are very common cancers in canines. They account for about 1/3 of all canine cancers. And then other systemic cancers, we were picking up about 3/4 of other systemic cancers in canines. So the test is accuracy. It's a significant cohort, 662 canines in total. And what's also very impressive is the specificity or the false positive rate. You subtract that number from 100 to get your false positive rates, only 3% false positives. So that's important because you don't want to be giving biopsies, anesthesia, and imaging technologies to canines that don't need it, right? So a very, very low false positive rate is very beneficial as well to these canines because only the canines that are coming back with a high score, a high-risk score from our blood test will be going on for additional and more invasive diagnostic tests, as I mentioned, biopsies or imaging technologies, because those are the only confirmatory tests that confirm this. Our blood test isn't saying definitively the canine has cancer. It's saying it's either low risk, moderate risk, or high risk, so it's stratified. It comes back with 3 different potential results: low risk, moderate, high. If it's low risk, then generally nothing is done. The canine is monitored, comes back in a year or 6 months for another wellness check. If it's moderate, perhaps more some additional less invasive diagnostic testing may be performed to kind of rule in or rule it out. And then if it comes back as high risk, it's very, very likely that your canine has cancer, and that would warrant the additional diagnostic tests and the risks associated with anesthesia, biopsies, and so forth, because your canine probably does have cancer. So we're really excited about this opportunity. What this means is now you can bring your canine in for a wellness check. Age 7 is generally the age at which it's recommended that your canine start getting screened for cancer on the asymptomatic side. For certain breeds of canine, it's under age 7, like golden retrievers, unfortunately start getting cancer at age 4 or age 5. So of the 84 million canines in the United States, the addressable market is around 20 million canines that are age 7 and older, and then another 5 or 6 million that are under age 7, but are of the breeds that get cancer typically before reaching the age of 7. So it's about a 25 million canine total addressable market on the asymptomatic screening side, and that would be once per year. It's actually recommended that you take your canine twice per year for a wellness check because of the shorter lifespan of canines vis-a-vis humans. Things develop much faster, right? They age much faster. They develop diseases much faster. So you can do the math. If through our partners we sell 2 million tests per year, we're getting on average around $750 per test thereabouts. So you can do the math. If we're selling 5 million tests per year, you're at 35 to 40 million in revenue. If we're selling 10 million tests per year, we're at 75 to 75 million or so in revenue. And as you can see here, we have a lot of interest in this test. So we have now signed licensing agreements with the following organizations on the left. The first one was Texas A&M, and that's because we developed the test in collaboration with Texas A&M University's Veterinary College of Medicine. So they've been selling the test through their gastroenterology lab for the last couple of years. And then we signed significant licensing deals with both Heska and IDEXX. Heska was signed 13 months ago. It is, I think we have some statistics here on it. There you can see it's a $28 million licensing deal. We received $10 million from Heska about 1 year ago. We're expecting the additional $18 million to come in the next year or so. We expect 13 million of that by the end of this quarter, so by June 30th of this year. And that's upon reaching certain milestones. And then the additional 6 million is if and when we show efficacy in felines and cats. And we are running studies right now at Texas A&M University to determine the efficacy or accuracy of our blood test in screening for cancer in felines. So as I mentioned, 10 million was received last year. We expect an additional 13 million between now and the end of Q2, and the last 6 million tranche probably sometime in the first half of next year. We are getting $10 for every test that Heska sells through a reference lab, and less than 10 for every test they sell through point-of-care technology. There are two ways to analyze a blood sample when it's taken from a canine. One is your traditional way, and the way that most of us have our blood analyzed. We'll go into our doctor's office, go in the back of the office and have blood drawn, or get a requisition form to go to Quest or LabCorp, and they draw 4 or 5 vials of blood. And then 3, 4, or 5 business days later, you get an email with your results, or you get a call from your doctor saying, "Hey, Scott, your cholesterol is a little high," which is the call I got last week. Anyway, so that's one way of doing it. The other way is through point of care. Heska is one of the leaders in point of care technology. They have a machine called the Element I+, and so if the doctor needs results, if the vet needs results right away, they can take the blood sample at the veterinary clinic and then put it into the Heska's Element I machine, and then within about 30 minutes or less, they'll get the results, low, higher, or moderate risk for cancer. IDEXX is one of the leaders in reference labs. I believe they are the largest animal health diagnostics reference lab company in the world. And in December of last year, we signed a licensing deal with them. So it's a nice complement. Heska is predominantly point of care. IDEXX is predominantly reference labs. Between the two, that's about, I think IDEXX has about a 45% market share of reference lab testing in the U.S. which is by far the largest, and Heska, I think, has about a 15% share of the point-of-care market. So both have significant shares of each segment of the market. And then, as some of you may know, Mars/Antech announced the acquisition of Heska a couple weeks ago, and Mars is one of the other leaders in the animal health diagnostics space, and we had not been able to come to terms with Mars previously. The fact that they're acquiring Heska and Mars/Antech, they're largely reference lab testing, should be interesting because the contract with Heska survives the acquisition, and Mars has, because of the acquisition of Veterinary Centers of America a number of years ago and the acquisition of a number of other veterinary clinics, they, I believe, have the world's largest, own the world's largest chain of veterinary clinics. So we believe the Heska acquisition is beneficial for Volition because it now allows Mars to see the performance of our blood test through their Heska subsidiary once the acquisition is closed. And then if they like that performance and they have this positive feedback from vets, they can actually then push through their own captive veterinary network our blood tests for both reference lab and point of care testing. So we view that as a positive. And between IDEXX, Heska, and Mars, you have most of the U.S. animal health diagnostics market share wrapped up with those three companies. So what this means for Volition going forward is potentially a very, very significant penetration of the U.S. animal health market with our blood test for canines. So we expect significant revenue, not so much this year because these companies are still launching and educating their sales force and educating veterinarians. But going forward in 24, 25, 26, we expect to see a fairly significant ramp in revenue, and that's just for asymptomatic screening in canines, and that's just the U.S., right? IDEXX has global operations. Mars and Antech have global operations. Heska has a little bit in Germany and a couple other regions within Europe. And if our blood test gets launched in felines, there's also the opportunity here for these companies to start selling the blood test for screening for cancer in cats. So there's a lot of opportunity here. In addition, we think there's a use case for monitoring as well. So as I mentioned earlier, if your canine is diagnosed with cancer and you decide of those three options, you decide to treat, we in Heska also believe there's a use case for monitoring. So what that means is if you opt to have your canine treated for cancer and it's undergoing treatment, and the treatment's often very similar to what humans would get in terms of treatment for cancer, we would expect that the amount of nucleosome debris, and that's what our test measures, derived from tumors, would shrink if the treatment is effective, because an effective treatment of cancer in canines would mean, a shrinkage of a tumor, partial or full removal or resection of the tumor. Therefore, it should be shedding less debris into the canine's bloodstream if the treatment is effective. And so we believe that to be a nice monitoring use case. So that's a smaller segment of the market. Obviously, it's only those canines that are confirmed with cancer whose owners opt to treat, but the test would be more frequent than the asymptomatic screening test. On that case, that would be once or twice per year, most likely for asymptomatic screening. But for monitoring, it would be multiple times during the treatment period. We've used an estimate of 4 tests during the treatment period, which could be 6 months, 9 months, 12 months. So it's a smaller segment of the market, but more frequent testing. And I think my CFO and I were doing the numbers last week or the week before. I think that's another 4 or 5 or 6 million tests. So if you use 5 million on top of the 25 for asymptomatic screening, you're at a total addressable market of about 30 million tests per year. That assumes one test for asymptomatic screening of the 25 million canines that are eligible, and 4 tests per year for those canines that are undergoing treatment for cancer. If an animal goes actually twice per year for wellness check, you can add to the 25 million tests per year. And again, you can add to that addressable market if and when our partners start selling internationally and or for feline. So it's a very significant revenue opportunity for us going forward. We as a company are profitable at around 28 to 30 million in revenue. And the last thing I'll say about the licensing deals is we gave Heska exclusivity on point of care, so we can't do a deal with any other company that has a point-of-care technology. And we signed a non-exclusive with Heska for reference labs and a non-exclusive with IDEX for reference labs. And then I'll just talk about Nu.Q Nets and try and wrap that up in about 5 or 6 minutes, so there's some time for questions if anyone has questions. NETs is an acronym for neutrophil extracellular traps, and NETs or NETosis, it's your body's first immune response to a bacteria, a virus, or a pathogen. And as you can see here on the left and on the right, you see when an invading bacteria or virus or pathogen enters the body, typically your white blood cells will migrate to the infection site, and they will release and inject neutrophil extracellular traps. It's chromatin material that your cells unwind, and they act like a spider web. They contain cytotoxic proteins, and what they do is they try to envelop and neutralize the invading virus or pathogen. Now, for reasons unknown, in certain individuals, the body overproduces NETs. It's the cytokine storm that we all heard about during the height of COVID, and that's actually what kills a patient. The cytokine storm, the overproduction of these cytotoxic proteins can cause thrombosis, can cause stroke, can cause organ failure. And we don't understand why certain individuals react this way, but they do in sepsis and COVID. It's what killed people at the height of the COVID pandemic, and it's what kills people through sepsis infections. Sepsis infections are very common bacterial infection that unfortunately people go into a hospital for some other form of treatment, for some other disease or problem, and end up getting a sepsis infection. And unfortunately, a number of people die each year from sepsis infections. You can see the number here. It's pretty staggering. Sepsis in the U.S., 1.7 million adults every year. And of those, 350,000 die each year from a sepsis infection. So it's a staggeringly high number and a staggeringly high percentage of people who have the infection that die from it. It's because the infection really creeps up and the treatment is often very reactionary. The same with COVID-19. During the height of the pandemic, you'd be confirmed infected with COVID-19, and those that were mildly symptomatic were usually sent home to isolate for 10, 14 days, right? But some of those people on day 5, day 7 got really, really sick from COVID. And there was no way to predict which of those patients with mild COVID-19 would progress to severe. With sepsis, it's very, very difficult to determine which patients with mild sepsis infections will progress to very severe and be at risk of death, because there's no good tool to predict which patients will progress. We believe we have a tool now to identify and flag those patients before they progress to severe symptoms. We're very excited about launching this blood test, likely first in Europe, because we've now CE marked this blood test in Europe. So as soon as we have, or if we have strong clinical data showing the efficacy here, we'll be able to launch in Europe very quickly because we already have the CE mark. And then we'd like to apply for a fast track designation here in the US to get this product out there. What we know is that our blood test quantifies the amount of NETs in a person's blood sample. And what we know is that there's a very, very strong linear correlation between quantity of NETs and disease severity. So ideally, a patient is infected with sepsis or COVID, is mildly symptomatic. They'd be given our blood tests for sepsis probably a couple times a day to monitor their NETs level, and in COVID-19, perhaps once per day. And if all of a sudden there's a huge spike in the amount of NETs in their blood sample that reaches, say, 20,000 nanograms per microliter, we know they're at risk, and they're very likely to develop the very severe symptoms of COVID-19 or sepsis. So we believe there's a lag time between the body's overproduction or the cytokine storm and a person getting really sick. So if we're running longitudinal studies to show if there is and what amount of lag time there is. So if we see a 12-hour, 24, 36, 48-hour lag time between the spike in their blood sample and them getting really sick, there's a chance for them to receive medical intervention. And so prime their body, with antibiotics or oxygen or whatever drugs or treatment might be necessary to reduce that severity of the symptoms when they hit, ideally reducing organ damage and reducing mortality rates. So really excited about this opportunity as well. As I mentioned, it's CE marked in Europe. We hope to have some additional data in Europe later this year. and then hope to launch this product in Europe next year and potentially the US next year or the year after. And then I'll open it up to some questions, and I'll just show you a financial snapshot. Again, we're listed on the NYSE American, ticker VNRX. Market cap is around 100 million. It's been as high as 400 million during the bubble we had a couple years ago during COVID. 52-week range, burning about 1.3 million per month. We have more cash than that because we just completed a raise in February, and we're expecting the additional 13 million in non-dilutive payments from the Heska deal to come in the next couple of months. And then we expect revenue to begin in earnest from the vet sales. Probably be a little bit slow pickup in terms of revenue growth this year, but then once the vets are comfortable using this test, and once they're ordering it and reordering it, and once dog owners understand the value of this test, we expect that revenue to ramp pretty significantly over the course of the next few years. So happy to answer any questions that anyone might have. Our website is volition.com. So I was supposed to repeat the question. What is our expected cash burn for this year? We typically burn about 1.3 to 1.5 million per month. So I'm sorry. Yeah. So sorry. It's usually around 2 million per month. So between 25 and 30 million. We are making some additional hires, and we have made some additional hires of some key executives. So the SG&A might punch that up somewhere between that 25 and 30 million. We also want to move some of our clinical studies forward and enroll patients in some larger studies, particularly in the oncology side for our human health. So it could get up to closer to 30 million. I think that was a typo when it was showing 1.3 million in burn per month. It's closer to 2. Yeah, our gross margin's about 85 to 90% on the animal health product. We're receiving around $750, and it costs under $1 to produce. That goes to about 10 to 20 cents when we're in mass production. Around 28, 30 million we're profitable, and ideally the animal health division will help to fund the NETs program and the human health program in oncology. So that's the idea there, is to let the vet, sort of the vet vertical generate and drive growth for the other verticals. I mean, if the stock were to get back up to $5, $7, $10 per share, and we're at a $500 million market cap, I think we probably would take down some of our S3. I'm not going to say we wouldn't raise additional capital. We're very reluctant to raise capital at $1.50 or $60 per share. This is some of the lowest prices we've ever had in the stock, and we're in the best position the company's ever been in terms of commercialization and patents and so forth. So, there's a disconnect, and it's not just our company. I'm sure all the presentations you're seeing today, so many of these companies are trading at cash or, trading at huge discounts. So it's just market conditions. But we're really excited about the future here. There's been some insider buying as well. When our windows open up, generally, we are buyers of the stock when our windows open. Our lawyer is very, very strict. I hope he's not listening, but sorry, Mark, if you're listening. But he's, we're very careful about the open windows. And our last 2 transactions, our last 2 capital raises, board members and insiders participated in both of those transactions. That's a great question. We've talked to some of them, and we want to keep talking to them. What we want to do is we want to really get the launch through with Heska and IDEX, and then talk about reimbursement with some of the insurance companies. I think it's a no-brainer for reimbursement, because it would catch a lot more of these cancers earlier. I think that's all we have time for questions, but I'll stand outside for a few minutes if anyone wanted to ask any follow-up questions. Thank you all for attending today.